Welcome back, students who are taking financial accounting, and we're working on the assigned problems from our digital study guide for the chapter 3 problems, group B, and we're working on 49, 3-49. And so I'm just going to pick up where I left off right here. Realize that if you looked at the 3-48B problems, okay, we had gone through adjusting entries. And when we're looking at this particular problem here, it says assume this is an unadjusted trial balance. Okay, so this is our unadjusted trial balance, and then these are the adjustments that were made. And so it says journalize the adjusting entries that that account for the differences between the two trial balances. Okay, so this is adjusted, this is unadjusted, and so the differences were the adjustments. So you can go back to problem 3-48 and see how those entries are made. I'm not going to go back through a lot of the theory here. Okay, I'm just going to kind of go down and make the journal entries because it's just recording the differences here. Okay, so if I'm coming down here and I see that my cash is still the same balance, accounts receivable has the same balance, my supplies account has a different balance. So if I have a supply amount for a debit of $19.50 and I end up with $8.25, that means I have to credit supplies, and the difference between those two are between $19.50 and $8.25. The difference is $5 to $1,125. So I'm going to credit supplies for $11.25, and I have to debit something else because debits have to equal credits. Well, I'm debiting supplies expense for $11.25. And that's all that this here problem is about. It's just going down and looking at the differences. So I have prepaid rent here, and this is exactly just like supplies. Okay, I mean, because prepaid rent is an asset, so is supplies. So I'm going to end up crediting prepaid rent, and the difference between 3,800 and 2,800 is 1,000. And so I have to debit something else. Well, if it's prepaid rent, I look at my expense and I see a rent expense, so that's 1,000. Right, next one is equipment is fine, accumulated depreciation. Right. Well, if I have a credit for 5,100 and it increases to 6,750, that means I'm going to credit accumulated depreciation equipment for the difference between the two, and that amount is, let's see, 6,750 less 5,100 is 1650. So I credit accumulated depreciation by 1650 because why? I'm increasing it, so I'm increasing on the credit side, and I have to debit something else. Well, the matching entry, the matching side for depreciation is depreciation expense. So I debit depreciation expense for 1650. Okay, accounts payable stayed the same. Okay, salary payable had nothing, and now it's a credit of 1175. So I credit salaries payable for 1175, and debits have to equal credit, so I debit something else. Well, if it's salaries and it's a payable, that means I owe the salary, which means I had to expense the salary, so it's salary expense for 1175. Same with interest payable. Okay, so my interest payable here went from 0 to 145, so I'm going to credit interest payable for 145. Debits have to equal credits, so I'm going to debit, and that would be interest revenue. I'm sorry, interest expense. Because I owe the interest payable, so it's interest expense for 145. Okay, so now I have unearned service revenue. All right, notice that my unearned service revenue went from a credit of 2,900 down to 1,300, meaning, we owed the money. Someone gave us money to perform a service which we hadn't performed yet, but we performed the difference between the two. In this case here, 2,900 less 1,300 is $1,600 of service we actually performed. So we have to capture that revenue. Okay, so since I have 2,900 as a credit, and I want to reduce that amount, that means I have to debit the unearned service revenue for 1,600, and I have to credit, since I'm performing the service, I'm going to credit service revenue for the 1,600. Okay. Now, notice that I went through the assets, and then the liabilities, and the revenue, that's the liability, and let me draw that a little easier here. Let's see here. Here's my assets, and here's my liability accounts, and then I have my equity accounts here, then I have service and revenue. Well, if I keep on going down here, notice that when I come to equity, common stock stays the same, retained earnings stays the same, dividend stays the same, because we're not making closing entries, we're making adjusting entries. And your double check here is, okay, if I look at my service revenue, yeah, my service revenue changed, right? Well, my service revenue changed by 1,600, which is that account, that adjusting entry there. Same with salaries expense, right? It changed by the amount for the salary expense right here, 1175. My rent expense changed by the adjusting entry for the rent expense here of $1,000. Depreciation expense equipment, it changed by the difference for the depreciation expense here. Interest expense, same thing. It changed by the amount for the interest expense here. And supplies expense, it went from 0 to 1125, which was the different, the expense right there. So notice that just what happened. You're not, when you're going down through here and you get down to, your equity, now you start moving into your revenue and expense, you're not making another entry just because there's a difference in those accounts. No, you have to consider that we had these as an unadjusted, then all of these here closing entries were made and posted to the accounts. And when they're posted to the accounts, we created new balances in the accounts, which gave us our adjusted trial balance. So by looking at the differences here, we don't just automatically keep on making entries. Okay, we have to think that, oh yes, these entries were posted. Okay, and when they were posted, this was the net effect on our revenue and expense accounts. Okay. So that's all there is, pretty much to, that particular problem. All right. And this one here is relatively short, so I'm going to keep it that way because the next problem, 50, has as opening key accounts, journalizing, preparing a trial balance. Okay, so that's going to be a little bit longer video. So again, go back to problem 3-48B in order to get a feel for the more common adjusting entries, which is exactly what we had here. Okay, and the only thing that we're doing is we're looking at it a different way. Okay, we're looking at it as the difference between the two, the unadjusted and the adjusted trial balance. So with that said, end of the video, and I'll see you in the next video for the next problem.